welcome. Today we are having a favorite lender, Gris Bettle, with us today. He's going to talk to us about some of the most important questions buyers have in the market today. Now this is June 2024.
That's right.
So
that's right.
It's important that we mention the date so we know what we're talking about interest rates wise.
Correct.
And the current situation that buyers are facing. And you're going to give us some great information, but first tell us a little bit about who you are and who you work with.
Sure. And it'd be amazing to think about what it'll be like 6 months from now.
Yes.
We'll have gotten through the election. Rates will hopefully be a little bit lower. Yeah, so that kind of goes into what we're going to talk about. But I'm with Guaranteed Rate Affinity. Guaranteed Rate's the nation's fourth largest lender, so we have all the tools and all the goodies to do what we need for our customers.
Yeah, and that's why we work together, because you have the tools. Now, I like to tell people that I used to be a lender in California. I was a lender for many years, so I can understand a lot of the products, and that's why we prefer to work with you, because you have some really good products, especially in this market today where it's so difficult for buyers. It's become so challenging to qualify or to actually to be able to afford a home. It's all over the news. Everybody talks about that, but there are ways that we can make that happen for buyers, and that's why we're here today to answer some of those questions, right? So I'm going to start with number one.
Okay.
And the biggest, the elephant in the room is the interest rates. They have been horrible. Now, I have to say, back in the 80s, they were in the 15, 16%, 18%. So a 7% today is actually not bad. So tell us a little bit, why are the rates today so high?
Well, you can get a lot of answers, but the ultimate answer is inflation. Inflation is the number one ill that the Federal Reserve, referred to as the Fed, has to battle. That's their modus operandi. That's why they exist. And that's why in the 80s, rates were so high, because they were trying to combat runaway inflation. And they learned a lot of lessons from those times. And they've raised rates, they've tightened money, so it costs more to get loans, which will hopefully slow down the economy.
So that's the whole purpose, and of course we've been here before, and the economy, as we know, history will repeat itself. It goes up and down, and so we're looking forward to when it comes down. But what are you hearing right now from the lending aspect about interest rates and where they may be heading, hopefully, if there's any?
Well, they have an expression now, marry the home, date the rate.
Okay.
What it means is, the expectation is rates will come down. Now they'll probably, unless there's a major pandemic or something bad like COVID, rates will probably get down in the high fives, low sixes, if we're lucky, mid fives. But that's where rates were before COVID hit. That's, thought of as economic equilibrium or a normal rate. So that's probably where we're headed. We hope so.
Now, what are the rates as of today? And I know we don't like to necessarily quote rates because they change daily.
Yeah. So yes, rates today, 30-year fixed, plain vanilla, excellent credit. There's so many factors that affect a rate. But that is about 6.75. So that's good, because it's come down some, because it was high as 7.5 about a month ago. And so 7.5 scares people, scares me. But high sixes gives hope, lowers costs, and then with rate buy downs, which I think we're going to talk about later.
We're going to talk about rate buy downs, absolutely.
Once you start at 6.75 with no points, then you're in striking range to get rates in the low sixes or even high fives.
So the biggest question I think buyers are having today is, should I buy a home now with these interest rates as they are, or should I wait?
Well, and I do want to put this out there, is definitely don't buy a house you can't afford. Make sure you can afford it. If you can stretch a little bit with the anticipation of rates coming down and you can refinance, that'll definitely lower costs. They're making some changes in the insurance market, which you touched on in your last podcast.
Yes.
And so those rates in a year or two should be coming down, as well as more competition is coming in the market, because the Florida legislature's made some gains there, hopefully. We're hoping. So costs should be coming down in the future, especially as inflation gets under control. But it's not guaranteed. But yes, that's what we're thinking. But one thing we do know for sure, not for sure, but every single time it's happened, every time rates go down, real estate prices go up. So you also have FOMO. That same house today might be, 10% more once rates come down. So
Yes.
right now we have a pretty normal market with inventory. Is that right?
Yeah, we are actually getting a little bit on a, I won't call it desperate, but we are seeing here in the Sarasota area that houses are just not moving, and sellers are getting a little bit more desperate, which brings us some great opportunities for great, negotiating with the sellers. And we're going to talk about a possibility to negotiate with the seller to help out with these interest rates right now, because a lot of them are getting desperate. We're starting to see emails with not only price reductions but even bonuses to the agents to bring buyers. Sellers are offering bonuses, so it's becoming a really good market for buyers to negotiate with the seller. And that brings me to question number 4. We've heard about the buy downs.
Yes.
And so the buy downs is an opportunity where the seller, you can negotiate with the seller to help buy down the interest rate for the buyer. Now there are 2 types of buy downs, right? As we spoke
That's
earlier.
right. That's
so
right.
you can tell us about those.
Okay, wonderful,
those for the
wonderful.
buyer.
Yes, there's permanent rate buy downs, which just like it sounds, you pay a fee to get the rate lower, and that's what you live with. There's also temporary buy downs, which are a little more popular because the rate is lower for the first, second, or even third year, depending on which program you go with. So that's pretty exciting. So for instance, let's say you have a $500,000 loan, a normal rate is 6.75, but if the seller pays, because really the seller is prepaying your interest on your behalf.
Yes.
So what happens is, let's say the seller pays 3% towards your closing costs, and that's better for the seller than a 5% price reduction where they only pay 3%. So it's a win-win. The buyer gets a lower payment.
Yes.
And the seller doesn't give up as much. Anyway, in this temporary scenario, if they pay 3, you could have the rate the first year that you pay on 3% lower the first year, 2% the second, and 1% the third, and then in year 4 it goes back to the normal 6.75. Now, what the gamble is, well-informed gamble is that you'll be able to refinance within 2 years, and then just get a regular lower rate. But in the meantime, you get a very low payment. A lot of the builders are offering these programs as well, so they're not uncommon. They're very common these days, and it really helps make the house affordable as long as you know it's only temporary, but it gradually goes to where it needs to be if you don't refinance.
Correct. So there are some risks, and we know they have to qualify for the full rate.
That's right.
So they have to have enough income to qualify at the 6.75, if that's what it is at that time.
That's right.
But they will get a lower payment, and with the insurance getting better also in the state, thank goodness for that. All that can be significant. But that opportunity right now, the sellers are probably willing to help out with those rates.
Absolutely.
Fantastic. If it's permanent, obviously they keep the rate for the 30-year.
Correct.
loan.
So for instance, in the same scenario, right now a permanent buy down is also attractive because before the current rate and before COVID, a 1% fee would only get your rate down 0.25%. So it took about 5 years to have that make sense. Now a 1-point fee typically gets you a 0.5 point lower.
Oh.
So that 6.75, if you get 3 points, you're looking at the 5.5, 6.25, maybe even 5.9. I just locked in a VA loan that was 5.99 with even only a 1.5 buy down. Wow. So certain loan programs are more attractive than others. So every loan, people just don't fit in a box anymore. So that's what's good about working with someone like me or
Yes.
another company is there's so many products and each person has a unique loan solution.
I mean, I just remember sometimes working with the big box, lenders, Wells Fargo, Bank of America. They're great for your savings and checking and maybe your credit cards, but they have a little box, and if you don't fit in that box when it comes to mortgages, you just don't get the mortgage. So that's why I prefer to work with somebody that has different options and tools. Now we're going to go with probably one of the most important questions for buyers, right? What are the costs?
Yes.
I mean, it's a brand new buyer, never bought a home. How much can they expect to need in order to get into a home? And obviously there are different programs, different loans that require less down payment and that sort of thing, but just give us a ballpark.
All right, so I'm about to say could be gone in 2 months or change, but yes, once you as a buyer know what you can afford a month. So let's say you're renting for $2,600 a month. That's
cheap these days.
Okay,
yes.
all right. So let's even say $3,000 a month.
Yes.
You're renting. So okay, I can afford a payment. So that payment's big enough to buy a house. Okay, so you can buy a house for $3,000 a month, depending on how much you put down. We're going to talk about down payment. That can be anywhere from a $325,000 house to a lot of first-time home buyers. The big issue is down payment. So we have a ton of down payment assistance programs. We have some you don't even have to be a first-time home buyer, and you can go up to the FHA max, which now is $556 in Sarasota County. $556,000. So you could buy a $550,000 home and put no money down. So you can do that, but again, you have to be able to afford the monthly payment. But if the only issue is down payment, typically in a loan you've got to put down 5%. A lot of first-time home buyer loans it's 3%. But with the down payment assistance, you put no money down, and those are very, very, very popular these days. And we are doing them all the time. And the temporary thing I was telling you about was, you may have heard of Florida Hometown Heroes.
Yeah.
If you work for a Florida company or a company that has a brick and mortar based anything, office location, like Walmart's not based in Florida, but they have brick and mortar.
Yeah.
So, but if you work for any Florida company, you get up to $35,000 down payment assistance, and it's called a silent second, where you don't pay any payments on it, and you don't pay it off until you sell or refinance. And that's a wonderful free money way. But because it's so popular, it runs out. So the state of Florida just authorized $100 million. If the past is any indication of the future, it'll be gone in about 2 months. But it just is being authorized as of July 1st.
I did see that. I saw that email saying, hey, get your buyers out there and
That's
to jump on this opportunity.
And it does have an income limit. If you make $131,000 or less, you qualify. If you make too much, then there's other programs. So,
but that's
yeah.
good to know. There are so many good opportunities right now for buyers. So
yes.
I really appreciate that you brought all this information, obviously. Now, some of this may sound like Chinese for people. We know that some, buy down and if you have questions, please contact us. We can explain it differently, better. Obviously, we're on a podcast, not trying to take too long, but we would love to help anybody that has questions. And sellers, if you have questions about how you can sell your home faster by offering some of these programs and incentives for buyers, give us a call. We educate the buyers and make them feel comfortable going forward, of course, sellers as well. But let's sell those homes. Let's put people in more homes.
Mm-hmm.
People need to own homes, and that's what our purpose is. That's what we work for.
Mm-hmm.
So give us a call. I still want to do another one where we talk about specialty loans.
Yes.
If you're an investor looking for a specialty, there are so many different products out there. We're going to do another podcast. And then we were talking about bridge loans where you can use your assets. Is that what it is? Or
yeah, you can take your equity in your current house that may not be selling as fast as you like and use that to go buy your next home.
So there you go. You don't have to sell your home in order to buy another home.
Correct.
See, we have so many good stuff. Just call us. If you have questions about those programs, we're here to answer them. And thank you again.
Oh,
See you next
my
time.
pleasure. All right, bye-bye.